What's up everybody? Welcome to the Stocks channel. My name is Corey. In Thanksgiving weeks we see the bears striking first, pulling back today across the board as we're starting to see big tech selling off yet again. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, just some quick housekeeping. This is Thanksgiving week, so this will likely be the only upload that I have for the week because I will be spending time with family and hopefully you'll be doing the same. I will still be doing all of the Discord updates, so there will be updates in the Stocks channel Discord, but there will likely not be YouTube uploads unless something comes up that I don't currently have planned. Also, don't forget to take advantage of the Black Friday deal on bank trade alerts, and you can catch that deal in the description below as well as the comment section. Alright, so today's SPY was down 0.36% and we did squeak out a close just below the 5 EMA, but overall you can see the bulls are still pushing with the bull trend in the moving averages and still making higher lows and higher highs on the daily chart. Now keep in mind, we're still viewing this as a trading range between 390 and 400, with the bull breakout being above 400 to close the gap at 408. And the bear breakdown below 390 to close the gap at 381. Trade the trading range until we get the breakout and then trade the breakout, but this is going to remain a low volume choppy week until we can see a breakout of this trading range, so do watch that range between 390 and 400. Now also don't forget that yes, we are still in a bear market and we are still below the resistance trend line as well as that gap fill, but do not forget in the short term we could still go higher before we end up rolling over and going lower. So we do have a gap below and a gap above, and we have no idea which gap is going to fill first, so that's why I always suggest you just wait for the price action to get the breakout and then you can trade in that direction. You can see today was very low volume in SPY, and that is very likely going to continue throughout the week. So we are very likely going to continue to get stuck in this trading range on low volume until the holiday is over, and then we could see where this market wants to go after Thanksgiving. Now just a quick caveat, last year on Friday after Thanksgiving we did have a very volatile sell-off, so don't write off the possibility that we could still see volatility this week. It's just typically a very low volume, boring week due to the holiday season. On the NASDAQ 100 triple Qs, we were down 1.03% today, and we did test the 50 EMA of support yet again, which is that level at 281. Remember, we're viewing the triple Qs as this trading range between the 50 EMA and this resistance level the bear is living at 293. So that is going to be the trading range between 281 and 293. The bull breakout above 293 takes us to close the gap at 308. And the bear breakdown below this support zone around 281 is very likely going to take us down to fill the gap at 268. So as you can tell, the bears are striking first on this Thanksgiving week with the red day and the triple Qs because we did get a big tech sell-off today. Again, this is all happening on low volume, but that's not going to matter if we lose support. The volume will be irrelevant. If we're going lower, we're going lower whether the volume is there or not. On the way down, look for possible support at the 20 simple moving average at 277. And if we bounce off of this support zone, look for the next resistance at 288 and then 293. On the Dow Jones, we were down 0.09%, so the Dow Jones continues to consolidate below this resistance at the gap fill at 339. And as you can tell, we did lose the support trend line 3 days ago, so we are starting to get that rollover look as we're losing the bull trend. The rollover from here will likely get another rejection from 339 all the way back down to fill the gap just below 331. And that is also going to be the rising 20-day simple moving average, so I do expect that to be strong support. If that support fails, we're coming back down to the 200 simple moving average, which is right there at 325. The bull breakout will be above 339 for a test of the previous daily high at 342, and then the bull breakout above that will be the gap fill at 347. On the Russell 2000 IWM ETF, we were down 0.52% today, and as you could tell, we did test the rising 20-day simple moving average yet again, and so far that level is still acting as support. If we lose that support right around 181, look for the gap fill to the downside right around 178. And if we lose the gap fill of support, we're going to lose the support trend line and very likely come back down to the previous daily low around 174. If we lose all of that support, it's goodbye to the bulls and we're coming all the way back down to retest the lows in the low 160s. The bull breakout will be above 187 and then 190, and that should be enough to take us up to the next resistance zone at 195. On the ARKK ETF, we were down 3.72% today, and you can see ARKK did break below $36, and we're very close to closing the gap at 34, which should come as no surprise because I did warn you that gap is very likely going to get filled while the ARK ETF is in this bear market. Look for that gap fill to act as potential instant support at 34, and if that level fails to act as support, we're coming back down to retest the low at 32.5. Below 32, we can still hit $30 in this bear market because there is no bottom in a bear market unless you hit strong support at $0. Look for that upside resistance at 36.5 and 40, and you're not getting bullish until we can break out of this bear trend. On the VIX, we were down 3.2% today, and the VIX is continuing to close below 24, which is supposed to be favoring the bulls, but as you can tell, fear leaving the market did not stop the market from selling off today. The VIX is trying to fill this gap down here at 21, and I do think you're going to see the bears stepping in and defending this market yet again once the VIX gets down near 20. So remember, we are still in a bear market, so as the VIX approaches 20, continue to get more cautious because we're very likely going to see another spike in volatility once we get there. On Bitcoin, we're currently down 3.25%, and Bitcoin is trying to break down through this support zone just below 16,000, which means we could be well on our way to the next price target at 14,395. Below that support, we're likely coming down to 12,000, and you can see the selling volume is picking up. So this is definitely still a very strong bear trend in Bitcoin ever since we broke down below that support at 19,000. The strong resistance is going to be up here at 17,500. And if by some miracle the bulls can break through that resistance, look for a retest of 19,000. On Amazon stock, we were down 1.78% today, and you can see Amazon is trying to fill the gap to the downside, which is right there at 89.5, but so far the bulls are trying to defend that level, but we are still in a bear trend with the price action below all the moving averages, so it will very likely see the gap getting filled in the very near future. Below the gap fill, if we continue lower, look for a retest of the daily closing low at 86, and below that we have the next downside price target at 77. Strong resistance is still going to be 97 and 102, and above 102 then you could get more bullish for the gap fill at 110. On Microsoft stock, we were up 0.34%, and Microsoft is still getting stuck in this very tight trading range between 240 and 242, and that is still going to be the resistance until we get the close above 242. Above 242, we can make a run for the previous daily high right around 247, and we still have critical resistance in Microsoft at 252. Above 252, we got the bull breakout for the gap fills in the 260s, but if we get rejected and break down below 240, you're looking for a retest of the breakout zone around 234 and potentially the gap fill at 228. So as you can tell, Microsoft is starting to look like a bull flag as long as it is above this support. But if we lose that support at 234, we are very likely going down much slower to at least fill the gap at 228 or test support at 225. On Nvidia stock, we were down 0.6%, and Nvidia got the second day in a row closing below 156. So we are very likely going to see the bears driving Nvidia down to close the gap at 142. We do have a bull trend in the short term, so the bulls will try to defend that gap fill. But if the bulls fail to bounce off 142, look for a retest of the next support at 133. Bull breakouts are going to require a break above 156 and then 166.5. On Tesla stock, we were down a whopping 6.84% today as we see high volume selling coming back into Tesla, and we blasted right through the price target right there at 173 and closed down below 168. So below 173, our next price target is going to be 163. And as you can tell, we are getting very oversold in the short term. But if it continues to get sold on high volume, nothing will matter, and we will see Tesla continuing to see capitulation. Remember, this is a retail favorite, and there's a lot of retailers in this stock that are still not capitulated out of it. So this could get ugly if we lose all of this support and don't get any meaningful bounce. So yes, you can start accumulating down here at these levels because that's the definition of buying low, but you do need to remember this isn't a bear trend and this is still a falling knife scenario. So if you need to manage your risk around these levels at 173 and 163. If we get the bounce, we could come all the way back up to about 178, all the way back up to the resistance trend line above 178, which is going to be right around 191. So watch all of that resistance, and do keep in mind if you are going long on Tesla, this is a falling knife because it is still a strong downtrend. On Apple stock, we were down 2.17% today, and we see Apple did get rejected from that resistance trend line, which was that critical resistance level at 152, and we're back down below 150, closing right on top of the 50 EMA at 148 and still above the critical support at 146. As long as Apple is above 146, it could continue to try to get the breakout above the resistance trend line, which is now going to be around 150 to 151. If Apple loses the support at 146, then you're looking for the bears to push Apple all the way back down to closing the gap at 138 And below 138, look for a retest of the low at 135, and there is a gap fill at 133. So just keep in mind, if Apple gets a strong rejection and comes all the way down to close the gap at 138, that is going to be a lot of downward pressure on the indices. But that is not going to be the path that we prefer until we lose this support at 146. If we do get the bull breakout above the 150s, look for a retest of the 200 simple moving average at 155. On the financial sector, we were up 0.31%, and we see the financials are still in this strong bull trend, but there is this gap to fill down here right around 34.3. So just keep that in mind. If we do start to roll over, we are very likely going to fill that gap to the downside. The industrials were up 0.32%, back up to the resistance around 100, and still has this gap to fill down here right around 97. The healthcare sector was up 0.04% today, getting that second day in a row, closing back over the resistance at 134, and still in a very strong bull trend. The energy sector was down 1.35% today, squeaking out a close above 88, but closing below the 20 simple moving average. So it's definitely looking like the energy sector is trying to roll over. So use that risk level at the support at 88.5, because below that we could come all the way back down to about 86 to 84. So jumping back over to the S&P 500, this is going to be a very low volume holiday week, but that does not guarantee that the market has to be flat, and that does not guarantee we can't get a breakout of this trading range. So watch the trading range between SPY 390 and 400 and be prepared to trade the breakout. And in the meantime, you can trade the trading range, but just be careful not to get chopped up. Choppy markets usually beat up both sides of the trade because the market can go any direction it wants while it's in the trading range. And you will have to use your risk levels as a bear at 400, or as a bull, your risk level is still down there at 390. So once again, happy Thanksgiving to all of you and your families. I hope you enjoy the restful holiday period, and I will see all of you when I get back from the holiday. Also, don't forget to take advantage of the Black Friday special deal off Bank Trade Alerts, where you can get 50% off 2 months of Bank S Plus or Bank. All you need to do is apply the coupon code Black Friday at checkout. Bank is absolutely crushing the market, beating all of the indices, including the TQQQs and the SQQQs, which is the only thing Bank trades. So take advantage of this special Black Friday deal now and try out Bank if you haven't already. And keep in mind, this is a limited time offer that will be expiring at the end of November. If you're looking to become a better price action trader, consider joining the Stocks Channel Trading Discord community, where you get access to all of my intraday updates and analysis. You can find out how to join the Stocks Channel Discord by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.